Hello there, opening great as always. Let's jump right into it. Let's learn a little bit, become more competent. Why? Because competence pays. So, over my lifetime, I made I made multiple seven figures through investing and my investment gains. Why? Because I became competent. So, let's get competent together today. And I'm talking, using 1000x to make projections because that's one of those, high level skills that we want to possess as an investor, right? And today I'm specifically talking about what does it mean to build a bull case, base case, bear case, so kind of like that far end of research. Of course, first comes the qualitatives, company management team, but let's just pretend that everything is already solved on there. And I'm getting into that far end. I already like the company and all of the qualitatives before, but now I want to move into potential for the company, my price targets, right? So, what do I mean specifically? Bull, base, bear case, right? So, with investing, long-term investing, nothing's certain, right? Only things certain are debt, taxes, and well, you can always add the quip for the third one. But anytime someone is, telling you some specific, one number price targets, I always thought about it that it's a little too pretentious to, think that we can be that precise, right? So, what we actually want to do with investing is to think in terms of probabilities and possibilities. And there is actually quite a nice mental model for this. So, let me show you also this, right? Because this basically shows you how some of the adjectives in, in English language, assess that certainty, right? Where you're basically getting from like, almost certain, very likely, probably, likely, possibly, right? And it goes a little bit in a similar way with investing, right? I'm not going to tell you, hey, AMD is going to be, let's say, $500 a share, in 2 years. I'm more interested in what's possible, what's probable, what's likely, right? And what are the percentages and likelihoods, right? So in a sense, investing is a little bit more similar akin to maybe poker or some of the, like a probabilistic games, right? So you don't want to be, even with yourself, right? You don't want to pretend that you know exactly the future, but you want to be directionally correct, right? As Peter Thiel would say, that, that nice word, being directionally correct. So that's what I'm doing here, right? Because future to high degree is uncertain, right? And when you have a company like AMD, and I've chosen AMD for multiple reasons. First, it's a great company, it's a big position in my portfolio, and I have a and my price target for the company are fairly optimistic, and I plan to maybe even add some more now that AMD is kind of a little bit range bound around those 200. But it's a different story. But when you actually look at AMD, right, and I'm using 1000x for this, so we are going to have a one-day sale for the April Fool, so there is going to be a link under the video if you want to get 1000x for yourself. But basically, when you see even analysts, right, so we have expectations for revenue and we have expectations for earnings per share for AMD. And as you can see, analysts have quite a wide range of expectations, right? So, on the low end, analysts are expecting, let's say, in terms of revenue, only 20% growth rate a year from now, right? Or kind of by the end of this year. Or on the high end, they expect 57%. And that's a big range, right? 20% on the low end and 57% on the high end. That's quite wild in terms of outcomes, right? So where's the reality? Well, we don't know yet. The reality will only happen. But we want to understand if we are getting a good deal today based on those probabilities, right? So bear with me, this is going to be a little bit technical, but that's why I'm recording this, because this is important. And if you will understand this on a high level, you're going to make a lot of money, but you have to understand it really, you have to have it here. So basically when I'm doing those, price targets, I want to create a bull case scenario that's basically, I'm thinking about it in terms of roughly 25% probability of this happening. Base case would be 50% of the situation happening, and bear case would be the lower 25%, right? So I want to have basically like a range, I don't want to create like a bull case that's very unlikely, like 5% potential. And sure, I can if I want to go deeper. But as a baseline, good rule of thumb is to basically create like a 25% as a bull case, 50% as the base case, and 25% probability of the bear case, right? So I'm getting kind of like a realistic range as the, base case most likely, And in that slightly optimistic, 1 out of 4 scenario, the bull case will happen. 1 out of 4 scenario, the bear case will happen. But most likely it's going to be somewhere in the middle, right? Because then, sure, if I'm positively, surprised, bull case happens, great. But I also want to understand what's the potential on the downside, right? And I'm basically taking these, analyst estimates. And then, of course, if you want to learn really in depth, we have the full group where we are discussing these things on a high level if you want to go even deeper. But for a starter, it's just good to take roughly those analyst estimates and use those analyst estimates for those projections, right? So you actually internalize, how do the numbers work, right? And you set them yourself, so you're not just taking my word for it, but you actually lay your hand on it and do these numbers on your own, right? So you actually understand how those numbers work. Because we, if we are investing just based on someone's recommendations, we are always going to come short, right? Because we don't have that internal confidence, right? We're just borrowing confidence from someone, whether it's, from someone on CNBC, from me, I might tell you, hey, I'm, bullish on AMD, but don't take my word for it, right? Put your hands on it, do your own projections, see if I'm correct, right? If you agree with my statements, right? And same here. So I basically filled the numbers for the AMD, growth rate on the high end, roughly in line with those analyst estimates, right? So I'm, again, looking here, analyst estimates on the high end, making them roughly in line, or once again, based on my experience, I can, do some little tweaks here and there. But for the baseline, let's take analyst, right? And let's see where it takes us. And with those numbers, it's actually showing me that, okay, in the bull case, AMD is actually going to be quite a strong results, right? Well ahead of the market, 33 to 41% compounded by 2029, which is well ahead of the market, right? Those are strong returns. If this happens, hey, I'm very happy. I'm outperforming the market with the decent margins. Amazing, right? Okay, let's have this as the bull case. Let's move on to the base case. Okay. Now I'm kind of taking a little bit more of those average numbers, right? Somewhere from the middle. And once again, the more experience you have, the more you can adjust. But I'm putting those here. Let's say 35% revenue growth on that, top line. And then let's say bottom line somewhere, getting around 6.91. So that would be earnings per share roughly here, analysts have median at, or the middle scenario at 6.7, right? Again, roughly in line. And 30 to 40 multiple for AMD, right? Okay, what do I get then, right? And you can see that I've also brought down the price to earnings multiples a little bit, right? To, let's say, maybe the market is not as enthusiastic, not as much of a premium there. So let's just bring it down. Well, that's telling me that AMD still should be around 430 to 580 by 2029, which is 19 to 28% compounded. That's still well ahead of the market, right? I like this. If I can maintain 20% CAGR over a decade, I'm golden, right? Like, what else do we know? Do we want, right? Like, if we can maintain 20% CAGR, that means we're a competent investor. That's the CAGR that brought me over the past, and I get even slightly better, right? But, a decade of investing and 20% CAGR with some at least modest contributions, you're a millionaire, multimillionaire, right? But you have to make sure that you're actually getting that sustainably every year, right? And now let's look at the bear case, right? So I brought it down to basically kind of like this bear case scenario here, right? And that's the only place where, okay, lower multiples, lower net income growth, and you can see also how sensitive, those calculations are, especially on that, net income and revenue growth, right? So AMD is basically a growth company. So the calculation is quite sensitive on those numbers. So that's the only place where suddenly, okay, only in bear case, AMD is going to be somewhere between 270 and 380, which means it's kind of either somewhat underperforming the market or somewhat better than the market. So, and you can look at it at two ways, right? Because it's telling me, well, I mean, in this case, there are probably better opportunities in the market. But if bear case is telling me that I'm still at least in line with the market, that's a shot worth taking in my book, right? Because I have 25% chance of basically staying in line with the market, and the remaining 75% is the chance of outperforming the market. I'm going to take it, right? That's why I'm still very bullish on AMD even here, right? And I was buying, of course, last year when AMD was like, 90, 100, 110, 120, right? That's where I was loading the boat, as Jeremy says. But this is still good, right? AMD is still good buy even here. And then you can basically see it a little bit more graphically, right? So here I kind of, ask ChatGPT to plot these price targets, on a chart. And you can basically see it here, right? This is the bull case, base case, bear case, right? What are the ranges of those numbers, right? So in that more positive scenario, so you can also really see how it's kind of like the cone of probabilities, right? So this is where I am basically at the moment, right? Or these are kind of like the starting points, and you can see how the future kind of diverges from those numbers, right? So again, with investing, I'm never speaking about exact numbers and exact price targets, but I'm always thinking about probabilities, possibilities, what could each action mean for my portfolio, because this is a good range, right? If we actually, let's say, let me just put it here in the oopsie. So here we go, right? So this is also, all of this is basically kind of like the range of possible probable outcomes, right? From here to here, right? 25% for this, roughly 50% for this, and roughly 25% for this, right? So it's relatively wild range. But also one of the points is that if I'm, basically somewhere here now, all of these are positive for me, right? The bear case means kind of in line with the market. It's not great, but it's acceptable, at least in line with the market, right? And here I'm getting somewhat ahead of the market, and here I'm getting quite a strong result, right? So that's all great. It would be a different scenario if, let's say, I might do something like this for a different company, and suddenly it's telling me, okay, well, your bull case scenario is somewhere here, your base case is maybe slightly ahead of the market, and then bear case is actually under the market. Then I have to be a little bit more careful, right? Or maybe do some double take. Am I actually, correct on this? And if I am, is the upside worth the potential downside? Because if I'm having, let's say, 25% chance of underperformance, 50% chance of performance in line with the market, and 25% chance of outperformance, maybe that's not that of a good deal, right? Especially that middle part, right? I definitely want to aim for staying ahead of the market in both bull and base case, right? Only bear case is acceptable to be in line with the market. I don't even want it to be kind of like under the market, unless it is some kind of like very asymmetric scenario with high growth stocks, but that's a story for a different day. That's much more complex, right? AMD is still, even though it's a growth company, it's somewhat of a intermediate complexity in terms of doing the projections, right? So this is basically how to think about probabilities in investing. If you want to, use 1000x for this, there is going to be, once again, April Fools. We have a big one-day sale, because otherwise 1000x is only internal tool for our, private group, for our members here. So of course, if you want, you can also apply for the full private group if you want to be around other serious, competent people, doing these kind of projections, having these discussions, because we do these on the live streams. Plus we are discussing about, these projections on a daily basis. Our members are posting projections. You can get feedback. But yeah, at least get the 1000x, because like everyone needs to do things like this, right? If you're just setting your price target based on some talking head on CNBC, that's not good enough, right? So let's become competent space. Appreciate you.